Good morning and welcome to our training today. I am David Miles. I am a coach, one of the coaches with the Academy of Trading and Investing. We are a group of coaches that have gotten together and formed a company with the exclusive purpose of teaching people how to be better traders, which translates to profitable traders. If any of you have been trading for a while, some of you may be experienced, some of you are brand new. It is not an easy thing to do until you learn how to do it, and it'll never be easy. But in the beginning, it is just it looks like a daunting task. We win, we fail, and we try to learn from our mistakes. We offer coaching, and we would invite you to join us if you like what you see and what we are trying to accomplish, and get with someone that has been there, done that, basically. So let me tell you a little bit about the coaches. We're a group of coaches. Like I said, we have over 100 years of combined experience in trading and investing in the stock market. We have coaches that are mainly fundamental investors, which means using fundamental analysis, finding great companies, profitable companies that are dominant in their industries, and buying them for the long haul. Warren Buffett is a fundamental trader. Also, some of our coaches, which includes me, are swing traders, and we base our swing trading on technical analysis. And that's what we want to talk about today. Technical analysis, what that is. Some of you, if you've seen our other training videos, you have an idea what that is. Some of you are very familiar with it. But we will show I'm going to show you my unique trading strategy today, and hopefully it will be helpful. Turning stock market chaos into order. And again, my name is David Miles, and I'm one of the coaches here at the Academy of Trading and Investing. I don't know if this looks familiar. I feel like you've been on a roller coaster ride, especially in the last week or so in the markets. I didn't plan this training during this time. It just happened to be on the schedule. But the market has had a major correction. Is it a new bear market? Is it a correction in a bull market? We'll see. Do you ever feel like you're just along for the ride? Is it chaotic? There's some prestigious universities, I believe it was Yale, I can't be absolutely sure. They did a study on stock market trends and prices, and this study came to the conclusion that the stock market is just a random walk. It is not predictable. I disagree with that. I've been trading for many, many years, as have the other coaches. When George Soros heard the results of that study, he said, well, if the stock market is not predictable, why am I a billionaire? So, can stock market price trends be predicted? Now, nothing can be, we're not going to subscribe to tomorrow's Wall Street Journal or anything like that. But when we trade, we can know or predict the probabilities of an up move or a down move, and we'll talk about that more today. Can the stock market trends be predicted? What if the answer is yes? Would that change your trading? Would that change your profitability? Of course it would. A lot of people have the word hope as the central word in their investment strategy. I bought a mutual fund, I bought some stocks, I bought some options, I bought some gold, bought some real estate, whatever it is, and I sure hope it goes up. You don't want to have hope as your main ingredient in your strategy. And we will show you how technical analysis can be a predictor of probabilities, a very good predictor of probabilities. One problem with fundamental analysis is that you are going to ride through drops like we had in 2008. Late in the year 2008, the market came down hard. and it stayed down for a little bit, and then it turned around and began the upward trend again. If you're an investor, a non-professional investor, it is hard to see your portfolios take that kind of a hit. People that had portfolios in October of 2008 that were made up of dominant, profitable companies, the Walmarts, ExxonMobils, 3Ms, Apple, you name it, they probably had a loss of about 30%, give or take, maybe 35%. That's a big drop to take. And the theory is just buy and hold, it'll come back. Well, since the stock market started trading in the United States in the late 1800s, the market has never, ever failed to make a new high. So buy and hold does work. If you have the stomach to see prices go through the floor. The NASDAQ in 2000, before that it was just streaming upward. I remember the Fed chairman at that point, when he was looking at the stock market, NASDAQ in particular, he said there's irrational exuberance out there. And what he was saying, which was kind of obvious as we look back in hindsight, this market, this growth is unsustainable. Any company name, any new company name that had .com in its name, in its title, would jump up, and it just got ridiculous. I remember I had people that I knew, friends, coworkers. They would say, you know, what do you do? Well, I'm a day trader, and they were making money. You could almost take a dartboard, put a bunch of stocks on it, throw a dart, hit the one. Hey, we'll buy that one. That would have worked, and that was great. But in early 2000, the NASDAQ crashed big time, and it did not come back to the highs that it achieved in 2000, early 2000, until 6-8 months ago. If you had bought at the top in 2000, bought the NASDAQ or the Qs, which is a exchange-traded fund that follows the NASDAQ, you would have been back to break even sometime in the last year. So you have to have the understanding. You have to know how to protect your long-term hold portfolio. You can do that with options, by the way. You can hedge your bets, and again, we can teach you how to do all these things. According to a recent study, 79% of investors lose money in the stock market. That is a really big number. That means 21% are making money over time, but only 4% make a 50% return per annum or more. And 50% a year is my minimum that I want to achieve through technical analysis. I like 100% better. Who doesn't? And these big numbers, 50, 100%, there's no guarantees, but they are achievable. Here is a picture of myself and Robert Kiyosaki. Again, Robert is the author of the best-selling book, Rich Dad, Poor Dad. And he said, quote, "With knowledge, you can profit greatly from a volatile market. Without knowledge, you will be the market's victim. Remember, knowledge is what makes a good investor, and only a good investor can profit from the world's foolishness." Robert one time mentioned, this was a few years ago, he says, "I love the fact that I can buy something and make money when that asset goes down." He was talking about put options. You can buy call options, put options. If you buy a put option and you are at the right time in the right place, the probabilities are in your favor, you'll make money when the market goes down. Very difficult to do, but I remember he said, I love that about the stock market. I also love that about the stock market. You know, I would like the market to go up all the time and everybody make money and their 401ks get bigger and bigger and bigger, but we're going to have the drops that we had in 2000, 2008. We had a big one. We had a big one just the last few days. We're trading back down. The Standard & Poor's is trading back down to about the 200-day moving average. Where is it going to go from here? We'll see. But when you utilize technical analysis, you are making money in upswings and downswings. I don't have I don't have a big prejudice about which way the market goes. Again, I hope it goes up so everybody gets richer and richer, but it just doesn't work that way. So I'm going to be in a position to make money when the market goes down. Technical analysis is just basically made up of oscillators that do mathematical formulas on the stock prices, and they make graphs and oscillators that, if used correctly, can tell you when the probabilities are in your favor. Technical analysis is a little bit like, you're driving down a country road at night, it's dark, there's no lights, and you turn on the headlights and you can see 100, 150 feet down the road. You can't see a mile down the road, but you can see the near distance, or the near future, if you will. So let's take a look at probabilities. And that's all we're looking for, probabilities. We never want to take a position or make a trade or buy a stock or mutual fund or basically options. I trade exclusively options until the probabilities are in our favor. This is a picture of two people playing blackjack, and could be Las Vegas or anywhere. But who would you rather be? This guy right here, the dealer, or this guy down here, the player? If you know anything about blackjack, you want to be the dealer. The dealer always has the odds in the dealer's favor. He is playing against high probabilities with the dealer. The only way you can turn the odds in your favor if you're a player / gambler is to learn how to count cards in the game of blackjack. And then you can turn the odds in your favor. But the casino is watching very closely. And if they see you're counting cards, they'll ban you from their casino. And they'll distribute your picture throughout all the other casinos all over the world, and you're going to be banned. So in the stock market, you become one of the 4%. Nobody's going to come and say, you know what, you're making too much money. We don't want you here anymore. We're going to ban you, and we're going to kick you out of the market. Not going to happen. So we don't want to be the person that comes through the front door and says, I'm going to play or trade against the probabilities, and I'm going to win long term. I've heard many people over the years, they like to go to Vegas. They say something like, I've been going to Vegas for about 10 years, 15 years. And I always ask them, well, how are you doing? How are your winnings? And I always typically get a very similar answer. Well, I'm about even or a little bit ahead. And I don't say anything, but you are not going to go to Vegas and play with the probabilities against you and break even or get a little bit ahead. Dealers, they're going to get ahead. Let's look at some charts, and I'll show you the indicators that I use and how I trade. I'll give you an introduction to that. Here is a chart, a 6-month chart. This is right up 40 minutes, 50 minutes before the close on Friday. And here is the 6-month trend. It's been up. You can look back a long ways. It's been up. Here's that correction I was talking about. If you look at your 401ks, mutual funds, etc., if you're in stocks, you're probably going to see a drawdown there. But will it come back to new highs? Sure it will. When will it do that? I have no idea. Is this a drop that's going to continue, or is this just a bump in the road that's going to rally back? I have no idea. But I can make money without having a firm commitment or idea about where the long-term trend is going. Let's talk about these indicators. These are the exact indicators I use. This is what my chart looks like. And the first thing we have is the Bollinger Bands. These are these two blue lines. And you can see the prices, or the candlesticks, typically trade between the upper Bollinger Band and the lower Bollinger Band. The upper Bollinger Band acts as moving resistance. And you can see it acts very effectively. Occasionally the prices or candlesticks will move outside the Bollinger Band, upper Bollinger Band, and that means a couple of things. Number one, we have a good strong move in place. Here we are. It also means that it could be about ready to correct to the downside. We know it's going to move inside pretty quickly. And when it does, that may be an opportunity to play the short side for a while. Now, the lower Bollinger Band is the support. And you can see that it acts as support. Prices hit it, bounce off, hit it, bounce off. So knowing where the likely resistance on top is going to be and the support on the bottom is very, very helpful. These will adjust and change because they're based on share prices. They'll adjust to what the market has actually done. Now in the middle, this will also adjust to what the market has actually done, but I have a 21-day moving average. A lot of people use 20, works just as well. But the 21-day moving average here, it will act as support when the candlesticks are on top, typically, and when the candlesticks move below it, it'll begin to act as resistance. Here we have the markets come down. It hits the 21-day, breaks down. This is not a real good example, but when it comes down, when it trades below the Bollinger Band, it'll come up and hit it, and usually stops right there. When it breaks above it, then it tends to act as support. You see that right here, especially in an up market like this, long-term up market. When it goes below the 21-day, it'll tend to act as resistance. You can see the market goes up, comes down, hits it, hesitates, breaks below, and then it begins to act as resistance there. When it moves back above it, then it tends to act as support. You can see support there. You can see support here. Went below it for 1 day, popped right back up. Support here, here, here. All the support. So can you use that in your trading? Absolutely. It'll keep you in the market at the right time. It'll keep you out of the market at the wrong time. Down below we have the three indicators that I use. This is a market forecast. It is available exclusively from Thinkorswim, which is a division of TD Ameritrade. And I think it's the best technical indicator that is out there. I've never seen anything better. It looks pretty confusing, like a toddler drew all over the walls with crayons, but these three colored lines are trends. The green line is the intermediate term trend, again, based on what the share prices are actually doing. It has a very little lag time. Here the market is moving up. Here it starts to level out, and it starts to move down here. That was pretty close to the top. When it starts to move up here, right here, that's relatively close to the bottom. Now we don't want to trade against this intermediate term trend, and it's color coded, so you always know the green is intermediate. But that gives us a good idea of what the market's doing. Look where it turned down. Here it turned down, right here. And then it kind of went sideways. And here it signaled the trend was heading down again. Coincidentally, it broke through the 21-day moving average, which is not acting as support. And then, down it came. There's a saying in the stock market, we climb the stairs in a bull market, then jump on the elevator to head down. And these corrections can be sharp. Did I trade this? Yes, I did. How did I do? I did very well. I'll show you what and how I traded and what was my thinking. The blue line here is the near-term trend, and the red line is the momentum indicator that acts as a very, very short-term trend. You can see it goes up and down like a hyperactive child, very, very short-term. Now down here is the MACD histogram. There's a zero line that runs through the middle. When prices are above the zero line, or the MACD is above the zero line, it looks like a mountain. It tends to be bullish. When it's down below, it looks like a valley, and it tends to be bearish. I have it set up this way on my chart because I'm not interested in. Here's a sell signal for the MACD. Okay, MACD says sell. I'm going to sell. Okay, well, Not a great time. We'll talk about these signal days. Here on this day, these indicators together said, hey, the market is likely not to move higher. And we'll talk about that in just a minute. I'm just interested in which way the line on the MACD is moving. The RSI is Relative Strength Index. Prices are getting stronger. The relative strength of stocks get weaker, and this tracks the rise and fall. Again, I'm only interested in which way the line is moving. Let me show you what I call a sell signal day. And when these sell signals flash, then I am bearish until I get a buy signal day, and then I'm bullish. And again, it's the probabilities are swinging in my favor. Do I win every trade? Of course not. But just like the dealer in Vegas, they're going to win the percentage of trades that they need to, the majority that keeps them very profitable. A sell signal day is the first day that all the lines on all three indicators move in the same direction, with the exception of this green line. We're not going to look at that other than that we don't want to trade, strongly against it. Here on this day here, and Thinkorswim draws this vertical line. Whoops. So you can see, you can find your place. But here, blue line's moving up, red line starting to move down. MACD's at the top, RSI's at the top. But the very next day, the blue and the red line move down, the MACD histogram moves down, the RSI moves down. This tells us two things. About 80% of the time, give or take, this market, once the sell signal day is flashed, the market will not move to above the most recent high, which was right there, for a week or two, sometimes a little bit longer. Now let me show you a buy signal day. It's a buy signal day right here. All the lines on all the indicators, this is the first day, that's very important, first day that this happens. And it shows us that two things. Again, probability of making new lows is low, and it also may start an uptrend. The sell signal may start a little downtrend. This is where we want to trade. We're bearish on a sell signal, we're bullish on a buy signal. Now here we get a sell signal, I'm bearish on the market, I may trade there. Now if the side point here, if the probability is around 80%, give or take, the market's not going to make new highs in the next week or so, can I trade? Yeah, I can sell a call right up here. And as long as that share price doesn't go up to my call strike price, I'm going to make my money, I'm going to keep my money. If I get a buy signal, can I trade that? Sure, I can sell a put down here. Also, I always sell strike prices outside the Bollinger Bands too. This is added protection. So I'm bearish here on this sell signal. Now here's a buy signal. See all the lines on all three indicators down here turned up. So now I'm bullish. Am I going to take a trade? We have other indicators that say not a great time to trade. We don't want to trade that particular buy signal. And I only stay bullish until right there. Then I turn bearish again. And I'm bearish until I get another buy signal. Then I'm bullish. It may start a trend, or here we get a sell signal. Right there, if you see that, all the lines and all the indicators are moving down except the green line. And that's moving up pretty sharply, but we know it's going to quickly roll over. But it tells us this trend is likely over. Now, it may just go sideways. Can you trade that? Sure. So that's basically buy and sell signal days. It gives you the probabilities of what the market is going to do. Take a look at a sell signal day right there. Now this is a good example of what I call a 2-day sell signal. Usually it's 1 day, but this is the day that all the lines and all the indicators are moving down, with the exception right here, with the exception of the green line. We just ignore that for these short-term trends. But you see the red line here, it's been down, but then it popped up. That's still down. Everything else is down, so we see that this is our sell signal day, and look what that one started. We're gonna, check back on our website often. We're gonna, publish different things. Let me show you some trades I made. On October 1st. MAR, which was Marriott, was moving up. We got a, here's a buy signal day. This works on all stocks, by the way. Here's a buy signal day. Didn't go below the low, moved up. It hit resistance at the 21-day moving average. When it broke above, it turns into support. But right here, I'm getting a little bit of a double top there. It's right at the upper Bollinger Band, and I get a sell signal right there. Am I going to make a trade there? Probably not. It's too close to the 21-day, which tends to repel prices back the other way. But then I build this little double top, and I get a sell signal right here. I see it break the 21-day average, but I don't know if it's going to bounce back. I don't know if it's going to still turn into support. It didn't, so I bought puts right there. And that was a good trade, very good trade. I tend to take half my profits when if I buy puts here, I tend to take half my profits at the lower Bollinger Band, and then I just ride it on down. We were trading outside the Bollinger Band. Shows we had a big, strong move, so I'm going to be moving my stop down as it moves down. Here it goes out again. We know it's coming back in soon, and we get a buy signal. Are we going to run out and buy this market? No. The trend is your friend, and the short-term trend is your friend. This is definitely against us. But if it builds a little bottom here, we might be able to make a trade here. But this says it won't make new lows. Another trade I did was HES, Hess Corporation. We get a sell signal right there. And it comes down. The 21 starts to act as a little bit of support. Excuse me, I had to get rid of my phone. I bought, when the broke through strongly, I bought puts right there. And that was a good little trade. I took most of my profits right here at the lower Bollinger Band. Can you make money from here to here with a put? Yes, you can. Let's show you some bullish trades. Pepsi. Now here I get a buy signal. And Pepsi starts to move up. It's traded outside the Bollinger Band. I don't expect it to make new lows, but it did. This is one of the times that was one of the 20% times that it wasn't reliable. But I did buy puts when it moved up to new highs here. Now the reason, I'm sorry, calls. I bought calls when it right here. Now I know that the market weakness hasn't really set in, but this is telling me that Pepsi wants to go higher. Now, picture an invisible rubber band that connects to share prices, and as the prices move away from the 21-day moving average, this invisible rubber band connects the share prices to the 21-day, and the stronger that goes up, the further away they get from the 21-day, the stronger that pull is, and it pulls it back down to the 21-day moving average. When it goes down below it, just the opposite effect occurs. So I bought calls when it moved to new highs. I was going to play this trade to the 21-day moving average. It came up here, started to get weak. The market was getting weak. So I said, I'm out of here. I made a little bit of money. I'm not going to buy a new Tesla with the money I made on that trade, but I made a little bit of money. It was a profitable trade. So I took, I'll have to check my books. I think I made about 10 trades, and 8 of them were profitable since October 1st. So we're having a very good month, and the majority of those are on the downside. BA, Boeing. We bought. Here's one of those trades again. It's a long way away from the 21-day. The rubber band is getting stretched. Tension is growing stronger. Wants to pull it back down to the 21-day moving average, we get a sell signal right there. Probably not going to exceed new highs. It didn't. And right here, when it started to drop below these lows, we bought puts right there. It rallied a little bit. No big deal. My stop's up here. Came down, and 21-day average, I took half my profits, and we're going to see where this goes. My stop is right up here. So, and it's probably going to get hit. It's okay. I took half my profits there, and it moved down further. I'll probably get a stop hit right about there. And no problem. We made money. We're good to go. So my goal with swing trading or using technical analysis in this way is to make consistent cash flow. And I'm usually in the trade I have a short-term strategy. We do weekly credit spreads or debit spreads. And we're in the market on Monday and we're out by Friday. We're probably profitable on those about in the neighborhood of 90% of the time. Directional trades, they're not as profitable 90% of the time, or the percent profit is not as high as the weeklies. But we have the potential to make more money on these moves. You know, you can make money as the market moves up, even in a bull market. Let's go back to the Standard & Poor's. You can make money going up. You can play these little corrections to the downside. The majority of your money is probably going to be made to the upside. Here's another buy opportunity. It hits the 21-day, which acts as support. It then takes off with a buy signal. Good time to buy puts until we get a sell signal right here, and then we're going to exit our trade. We're bullish until we're bearish. And in an uptrend, you see the uptrends tend to be stronger, not always. But it's been a good market, and you know, I'm not afraid to trade these big drops. In fact, you'll make most of the money when the market gets very volatile. So let's again, who do you want to be here? The dealer or the player? We invite you to join us as a client. You know, Robert talked about knowledge. If you don't have knowledge, you're the victim of those that do. If you trade with the probabilities, like this guy, you're going to take money from this guy. So with technical analysis and the system that I've developed, you can be the casino. The odds are in your favor. Are you going to win every game? No, neither does the casino, but they win big time over the long term. So keeping the probabilities in your favor can provide this order out of seeming chaos. When it comes to stock market investing, our advice is to take matters into your own hands. And again, we invite you to join us. We have a lot of experience. We teach specific strategies. I even take my clients into the market. We look at the market before it opens on Monday, and then we go into the market after it opens, and I give examples of what a possibility of a good trade and actually make trades. I also, when I send my trade examples out, which I do on a regular basis, I always put broker statements with it. So, and if you don't, you know, if someone doesn't provide broker statements, well, why not? So anyway, again, we invite you to join us. Check back with our website periodically, and I wish you the very best in your trading. And hopefully, we'll always be the casino.